All right, good evening, everybody. This is Jeff Scott. Welcome to tonight's webinar. It is January 21st, 2012. Today was a holiday, so I decided to do this on Monday night. This is Martin Luther King Day and also the inauguration of Obama's second term. And what a difference 4 years makes. When he got inaugurated the first time, every time a president spoke, the market seemed to drop. Unfortunately for President Obama, he came in near the end and probably in the accelerating of the fall of the market. And he fortunately stuck around long enough to watch the market have a great recovery. So today, market was closed. We'll see what it does when it opens. Futures traded up a little bit during the day, and they traded down tonight. Net probably not much different from where we went out on Friday. This is for educational purposes only, and recommendations in the spirit of education and not investment advice. I'm a doctor, not a broker. Most physicians lose money with their investments. I'm not affiliated. I don't own. I don't get paid by any software vendors. I pay for the tools I use, and hopefully that keeps you without a lot of bias. I use a lot of tools. For real time, I either have to have TradeStation or Thinkorswim. I'd like to get rid of one of them, but it's tough because I've got substantial investments in both of them from proprietary indicators and trading systems. I need something for analysis. I use High Growth Stock Investor. I supplement it as needed with EdgeRater, ETF Bandit from EdgeRater.com, and seasonal analysis is the best choice for Magenta Trader. And then I rely much on the teachings of Ian Woodward and Ron Brown, whom I'll mention over the course of this 45-minute program. Speaking here, Ian on the left, Ron on the right. I title this Be Your Own Guru. You have to form your own investment techniques. This is what I do. It's what I learned. It doesn't mean it's right or wrong. It's what works for me. I apologize if it's muffled, but I'm on the road, and it's a long-distance call, so I'm actually using my cell phone instead of the phone in the hotel, so I don't get any big surprises. And it's pretty self-explanatory. These are some of the folks, their books, and their websites that I have found helpful to me. I'll talk about buy list throughout the night. All that means is if my inclination is to be facing long, and I find stocks that are to go long with, that if the market opens up in the direction I want, if the sector and industry are moving the way I want, and if the stock I've chosen seems to be behaving well, it might be something that I consider purchasing, and I may put it into some automated trading system. Just because it makes our list at 9:45 at night on the night before the market opens does not mean I'm going to put at the market order, because I found in those days I get what I ask for. I get sold at the market, I bought at the market, which is the highest price of the day, and it trades off the rest of the day. As usual, I'll do my weekend review. I'll look at some of the things that I've done to measure the performance of last week. We'll do some top-down investing, look at some shortcuts, and maybe touch some of the other programs. Ian on the left, Ron on the right are the secret weapons of my investment style. And very quickly, just to go off into the web land, this is the website, highgrowthstock.com. This is what you'll get to when you go to highgrowthstock.com. Here's a free 30-day trial, no credit card needed. If you go into reports, Ron Brown puts out a weekly movie. I put one out as well. Ron is usually about how to use the program with some wisdom about the market. I do more of a longer top-down approach to the market. Under support, if you currently have the program, you go to Learning Center. And besides the fact that there's a lot of training videos for me and others, you need to go down to the add-ons and make sure you've added on, that you've installed the filters and the user groups so that yours will look something like what I'm using tonight. And lastly, one of the best things that these guys do is they do twice a year a seminar in Palos Verdes, California. This time it's from March 23rd through 25th. It's $1,250. It includes your lunches and your breakfast. It will be great information. You will be thrilled that you went there. And although Ian seems to be getting younger every year, I don't think we'll have many more of these programs. And so something that I highly and strongly recommend. All right, so the first thing I like to do is to look at some of the things that give me an idea of what the market did last week. So one of the things that HGSI has, and I got to change the dates because it ran from the 11th to the 18th. I don't know what I was thinking this weekend. I guess I kept thinking that this was the 13th. So what I did here is I have a lot of groups that I follow over the week. And these groups are things that I look at usually on Sunday, trying to figure out what stocks to buy and sell and hold. And then I like to track performance, looking at which groups are leading. And as the week goes on, I see what's working in that group at that moment, and sometimes I'll go and make some purchases. So the tool in HGSI is called Group Performance Analysis. And what it does is it takes all those groups, and I ran them, assuming I bought them on Friday at the close on the 4th, excuse me, the 11th, here I go again, and sold them at close on the 18th. And it gives me an idea of how the market did. So, for example, I know that the S&P 500 had a decent week. It was up 0.95%. I know that I like HGSI type stocks, and the HGSI 100 was up 1.15%. So, and I guess it's safe to say it was performing at or above the market. And the IBD 50, which trades a smaller number of stocks, both had 72% up, was up a little bit higher at 1.31. Now, for the first time in a couple of weeks, I actually underperformed the market, and I think it's fair when I do poorly as well. I don't think I did poorly, and it's also important to recommend that this really isn't true because these are what I had at the end of the day Friday. It doesn't mean I had a week later, and I trade them as hedges, and I've got long and shorts in my portfolio as we get to this point in the market where I'm concerned that we are due a correction. So I probably will underperform if it's a strong up market. I look at what's moving. This is a search out of OmniTrader. But what I really like to look at are my green candle lows and my red candle highs. And these have become my go-to, the green candle lows. And what these mean is this is at least a 10-day low where they opened, traded below the low of the prior day, and closed higher than they opened, so a green candle, and it's at the low of at least a 10-day downtrend. So these are stocks that have been falling, and you could see those I picked on Monday were up 8 out of 10, up 2.31. Those picks on Sunday were up 7 out of 8, up 1.22, and they outperformed. And right now I'll talk more about green candle lows, but that's one of my favorite searches that I will do intraday during the market, looking for things that are reversing, and that to me is a simple reversal pattern that's pretty easy for me to identify. What else do I like to do? I like to take a look at EdgeRater. I think if other people have that same problem with Microsoft Excel, doesn't matter what computer, what version when I turn it off. So in EdgeRater, and I've already run this, so I can just open up to it. I believe I've got it down. Let's take a look. If not, I'll go back and look at something else while it's going. EdgeRater will take the S&P 1500 for me and divide it up into 12 baskets. A basket below the lower band, a basket above the upper band, and then within the two bands, which is 100%, it'll break it up into aliquots of 10, so 10 bands. And then I like to see where the stocks fall because I know that in a strong uptrend, for example, and actually, you know what, it's not set up on this computer yet. So I'm not going to do it right now. I can tell you that I did run it this weekend on my other machine, and it showed, in the other machine, it showed that it was not as oversold as it's been. So here's what I do to set that up. I go into Group Database, Reference Groups, Major Market Index Components, S&P 15, and I'm going to go ASCII Utilities, Export as a List, and I'm going to go and find, there it is, it's right into EdgeRater, hit OK. So don't tell me that. Let me try that again. And if that still has a problem, I'm just going to skip it and I'll fix it later on. Symbol only, symbol, symbol, symbol only. Browse, make sure I'm in the right place. Go to Documents, EdgeRater, Symbol Lists. I'm going to save it here. Perfect. So now I'm going to reopen up EdgeRater, or EdgeClub, which is the latest and greatest version of EdgeRater. And by the way, I'm trying out a new computer today to see if the resolution is any better. I've had a lot of concern by me, and I've been told by others that the resolution on my map with the retinal screen is too big, too small for people to see. So I picked up an Acer S7, which I got to tell you, I don't know if you can see it any better, but what a cool machine this is. So I'm going to go into Home. I'm going to set my data provider at HGSI, hit Apply, and hit OK. Now I'm going to go to Symbol List. I'm going to check out S&P 1500, and I'm going to very quickly, I'm going to make that. So while I'm doing that, let's take a look at within, here's the futures. You could see here's the beginning of the 21st where my hand is. So the market actually traded up at the end of the day today as Europe traded up. Japan's waiting for some big news, and it's traded off just a little bit tonight, but it's kind of not much different than where it ended up on Friday. If I look at the futures themselves here, you can see in this session the S&Ps are down 2 1/4. And just to get an idea of the strength in this market, this is the monthly, since the beginning of January, movement in the S&P futures, and it's running into some pivots, so it wouldn't be surprising if we start to see some resistance over at this level. I like looking at the NASDAQ in with elder terms to get an idea of how that index is trading. And last time I was concerned here, as you could see, because of a MACD divergence, it keeps making a higher high. And if you look at this, that divergence continues. So that's a sign of potential weakening. So the MACD histogram has made a lower high and keeps dropping despite making new highs in the market. That's kind of ominous, and it would suggest that this market is losing momentum and getting closer to topping. If you look at the colors, blue means I can pretty much do whatever I want. Green means I can't short, and red means I can't buy. And you can see on the weekly, on the daily NASDAQ, we've got that divergence, which I'm concerned about. Near the top, but not at the top of its bands. It came back a little bit on Friday. On the weekly and on the monthly, it's painting green. So NASDAQ is high. Some concern that it might be slowing down its momentum, but not on a sell signal as of yet. Okay, so in EdgeRater, now that I've updated my data, I just need to go into EdgeRater templates, and I want to run the buckets report, and I hit run, and it's running it hopefully as we speak. Now it's running, and so basically what I want to get an idea is where is the average stock trading within the Bollinger Bands, and then based upon where it's trading in the Bollinger Bands to get an idea if it's overbought, oversold, and if there's any danger to be concerned about. So here's what it's doing. It's taking a cup of water. The bottom of the lower band is 0. The top is 1. And then making 10 slices. And we know in a bull market, the majority will be up here, bouncing between the upper and the mid. In a bear market, the majority of stocks will be down here, bouncing between the lower and the mid. Over 90% of the time, the stock is between the upper and lower band, which means about 5% of the time it's above, 5% of the time it's below. And if it spends most of the time within the bands and it gets outside the bands, what's going to happen? It's going to move back into the bands. So let's take a look at what we learned. We learned that 86% of the stocks on the 18th Friday were above the mid-band of percent B. That is very bullish. We see over here that 12.5% are above the upper band. And if you look at the top 10, the top 3 here, 25, 40, 50% are above 70 to 80%. So that tells me that we're getting somewhat to the point of being oversold. Now, if I go back a week, you could see we had less sitting far to the right. The number here not much different. If I go back a week earlier, you could see what happens when the market gets really extended. 35% of the stocks are trading above the upper band. So we've been more extended, although we are at what appears to be a high level with the majority of the stocks at the higher level of the Bollinger Bands. All right, now I'd like to go into HGSI, and there's a number of things that I'm going to do here to get an understanding of what the market is doing. I am going in my warehouse group, and I'm with the P1, which gives me a all technical balanced short, a couple of days versus a couple of weeks, weighted more to a couple of days view. And let's take a look at where the strength is in the market. So I go into Major Markets Plus, top down. I've got 20 different things. And as you can see here, ranked by combo. So this combo ranker, one of the secrets of HGSI is it allows you to rank things, looks at 1-day price change, 5-day price change, forced day 2 and 13, and accumulation and distribution. So the big weight is on 1-day changes, but because it's got that 13-day force, it's really looking out a couple of weeks, 3 weeks about in total. So using this is my favorite way of looking at markets. The Dow shows the biggest strength, volatility the weakest, and interestingly, small caps, the NYSE has a lot of small caps, seem to be doing better than some of the others, the S&P 500, S&P 100, NASDAQ 100 down the list. If we look at what happened on Friday, gasoline and utilities were up the most. Commodities were up. So with the dollar, that's kind of interesting. And the weakness has been on 1 day, 8.2% of volatility. Gold had a tough time. If you look at the 5-day performance, silver, gasoline, Dow transports, oil were leaders. Volatility in NASDAQ 100 were down for the 5-day period. So let's go back to our combo rank. Let's take a look at some of these. Let's start with the Dow. So, all right, this happened to me a few minutes ago, so let me see if I can get that to stop. All right, so I'm going to have to figure out what I can't do with this computer. So here's the Dow Industrial Average, and you could see it's getting close to highs, where it's been probably breaking out of recent highs. And 2 pocket pivots on Thursday and Friday. Everything is green. The dollar looks about as bullish as it's looked, the Dow looks as bullish as it's done in quite some time. And if we look at a monthly, or weekly rather, going back a couple of years, we are on a weekly thing breaking out 2 new highs. So the Dow looks extremely bullish. No surprise why it's near the top of my list. Now, is it getting overextended? Has it run too fast, too far? Perhaps, and maybe we are due a pullback, but looking at this, that's quite a bullish picture. The NYSE, which I like to look at because it's a mixture of large and small stocks, also had a pocket pivot, which is a slight blue on Friday. Powerful run ever since breaking above the 200-day moving average back in the middle of November. Everything is green on the momentum indicators. For those that are new, the bongos are a momentum indicator. The force is a momentum indicator. One where my arrowhead now is accumulation distribution. Blue pocket pivots up, red pocket pivots down. Here's volume. And the green is a Eureka, which is a follow-through day on the NYSE. It only looks at the NYSE no matter what stock I'm looking at. A red would be the opposite way. And on the bottom we have kahunas, which are a big move within the Bollinger Bands, something you'll learn about in Palos Verdes. So a lot of strength in the NYSE. S&P 600, again, clearly breaking out to multi-month, if not longer highs, with a pocket pivot on Friday. This is a very powerful looking market. Let's go to where some of the weaknesses. The S&P 500, and I think weakness is relative because you can see it too has had a very nice day and actually closed up on Friday 0.34. Not under as much accumulation, this is yellow, compared to the others we looked at. Take a look at the Russell 2000. And again, very bullish move, multi-month, if not longer highs. Very attractive looking on the Russell 2000. We look at some of the, look at the VIX, you see a VIX of about 12, which is about as low as it's gotten. In fact, let's go out of this view, and let me look at something that I have a little bit longer view back. This is just simple 200-day in red, 50 simple in blue, 17-day simple in green, and then a 4 in the light orange. And let's look at this back on a monthly and see if it's the last time we got to this 12 area. So there's a congestion in this area, but this is going back to 2006, 2007. So if you think about it, if the VIX is as low as it's been in 5 years, is it likely to get lower, maybe, or is this a natural place for it to rebound? I think I'm going to bet that we've got some volatility and a correction in our future, and the VIX setting up for a rebound. That said, as long as the Fed continues to look like it wants to print money, there's no reason that says that the VIX can't continue to be weak. I like to look at the S&P. Before we get those, look at gold and silver and oil. Here's the gold spiders. Pull back down the 200-day moving average. It's now stuck with resistance here at the 50. And you can see where that 50 has been resistant several times, so it's got to break above the 50 for me to be a believer in gold. See what silver looks like. Same thing, right up resistance at that 50-day moving average. It's got to get above it and stay above it for me to become a believer. We look at oil. And something interesting about oil, and maybe now I see why. Oil service stocks really started moving this week, and you can see here pocket pivots in oil breaking above the 200-day moving average, which had been resistant several times. And this is a very bullish pattern. Everything is green. And maybe I wish this was live with Luke Powers on the call, our local regional oil expert, because I wonder if something fundamentally has changed with oil. And is that why the service stocks are up? I like to look at the S&P 1500 because the 1500 represents the 600 to small, the 400 mid, and the 500 large. So it gives us a picture of the market as a whole. Now let's just spend a couple minutes on this picture, and I want to make sure I'm in the right one of these. I've got a couple of kitchen sinks, and they're not all the same. I guess this is the, try the revised one. Okay. So another indicator just to bring up is the high jump bar. And whenever you hit the top of the high jump bar, so this is the highest that it's been over a period of time, stocks indices have a tendency of pulling back. You can see that it's a signal of extension in the market, and we're starting to get up, but we're not at the high jump yet. And if you look at where we've gone from, nice and glaciers, I click on that, click on there, click on that. So we've gone from, here's my green candle here, down to my green candle low here. And in 43 periods, there was a 9% fall in the S&P 1500. And now we've gone from my green candle low to my high on Friday, give or take, 42 periods, and we're up 11.0. So we've had just a ferocious recovery and continues to look quite bullish. Not to say that we're not getting to the point where one would not expect to see some element of a correction. A couple of other things to look at here. Whereas I wanted to show you. You notice how these moving averages, I love them. Support broke through but got above this relatively quickly. How that 50 was support here several times until it broke through the 50, and then it became resistance. Hopefully it'll be support again as we take a move. But we are pretty extended, and it wouldn't shock me if we saw a correction before long. I like to look next at the major industry groups, and just to make sure that there's nothing new that's popped in with this update. As you can see, there's 146 groups, and these are ranked by top down, and I have to make sure raw combos right there we go. So number one was industrial conglomerates, then oil, gas, drilling. As I said, drillers were all over my map today when I looked at my favorite stocks. Construction, materials, oil, gas, equipment, apparel, retail. Now the problem with this view is, as I said earlier, this is about a 3-week view heavily weighted towards the 1 week. When I look at industry groups for my top-down investing, I want to go to force up 1, 2D, and A up. So I'm looking at 2-day force. So this is really price and volume. And for those who don't know force, force index equals volume today times close today minus close yesterday. It's plotted daily, and then we look at a 2-day and a 13-day exponential moving average. And for me, I want to buy stocks in an uptrend, which means a positive 13-day can pull back. So I might be looking for when the 2-day goes red, and then try and get it before it switches back over to positive. So this is just a 2-day. These are the most positive things in the market, and you can see 5-day returns here at 5.9%. Let's take a quick look at the top 8 or 9, and then we'll look at what's on the bottom. So the 145, 81 of them were positive, which is a higher number than last week. Computer hardware, this is all about my 3D printing. This is 3D Systems Corp. This is a stock in Stratasys, which looks the same. Everything is green from the momentum. It makes money, although slowing earnings as we go forward. You see big earnings back here a year ago, slowed down, but does make money, trades at a multiple of 65. Beautiful stock, living at the high jump bar, an area where we'd expect it to pull back. But this is a beast that just keeps on growing, and the other one in its group is Stratasys. Dell has had some movement because of potential takeovers. I'm not going to play that story. Here's Stratasys, a lot less extended than 3D than VDD. Both in the same industry, trades also at a high multiple of 72% and no dividend. These are clearly leaders and have been leaders for quite some time. The next group that was interesting was home building, and no shocker here. Home building has been incredibly strong. I own several of these, and I hope you've been playing them as well. And frankly, they will run out of steam, and they will turn over. But there are a lot of other things with them, like Sherwin-Williams, PPG, so those that make paints, lumber, electronics, dishwashers, washing machines. Anybody that sells things that you got to put in these new houses have been moving as well. Cement. Another thing, Pulte Group is one of the leaders, and you could see what a beautiful lower left, upper right, pretty tight except for in here. Pocket pivot on Thursday, gap up again on Friday. Everything is green. Kahuna on Thursday. Strength in the market. Look at the earnings per share here and your growth, and you look at a multiple of 42, so a high multiple, but not when you look at that growth rate. Hovenia is a cheap stock, setting up a nice time to buy. Notice how it pulled back on Thursday and bounced off the 50. I think it runs again. It does not make money, so from an earnings perspective, it's a little bit weaker than some of the others. But like I said, it might be setting up as a nice time to buy. Lennar, another rocket, lower left, upper right, all green, great earnings per share growth rate, nothing new to say there. And Toll Brothers have pulled back and broke above their 405, as we call it in HGSI land. Everything's green, a couple of pocket tickets last week. So home builders, pick your poison. They look good. You should be in one of them. Investment banking and brokerage. It was an earnings week for this group. Morgan Stanley having up 8% on Friday after earnings, and you could see these are stocks that have great, intermittently great earnings per share. In an uptrend, big gap up on Friday. Is that an exhaustion gap or is the start of something new? It had kahunas and volume. It's coming up to that 200-day moving average at 24. If it can break and hold above that 200-day moving average, I would argue it's probably the beginning of something new and not an exhaustion gap. Goldman Sachs has been another one that's been in a big move, running up its 8-day exponential moving average here. All of it is green, and its earnings, I'm not sure, are out yet. Be careful on these things because of earnings. And let's see. Next group down, this is top-down investing, one at a time. Industrial conglomerates, probably got GE on the top. They had earnings this past week, and you could see they were up 3.5% on Friday. And a stock that had pulled back, give you a couple of dips at the 200-day moving average. Big gap on Friday. Everything's green. The only thing that I saw concerning in the earnings was that very dependent on GE Capital, which has let it flow down into the dumps, and that got some pushback from the analysts. That's the strength in this group. So when I do top-down investing, I look at these top 7 or 8 groups, and I look for things to buy. Pharmaceutical index, AbbVie, since I got some of this in a spin-off, I'll take a quick look. These were not positive a week ago. AbbVie is a spin-off from Abbott. Abbott did a split, 50-50, 2-for-1, one of each. And this is the high growth arm. And you can see it's kind of young, and but it's not a young company in that it's part of Abbott. Anything else here that looks interesting from my look this week? Just out of curiosity, take a look at what J&J and Merck look like, and then we'll move on. J&J is lower left, upper right. It's kind of getting extended here. Earnings per share growth on these big pharmas has come to a screeching halt, yet they pay nice dividends here. It's 3.3%. On Merck, it's 4%. Pull back, maybe a little better chance to buy here off the 200-day moving average. But like the other, like J&J, no earnings per share growth on the picture, and that's something that I like to see. I own Valiant. It's kind of trading at a high, so it's probably the wrong time to get in. And whenever I see the 0 here on the earnings, these are the last 8 quarters. Here's the next 2. I question this, so I typically in the background have MarketSmith. So I might just pull up VRX, and I see a stock that in 2013 is predicting $5.64 of earnings. Its current multiple is 15. If I multiply 15 times 5.6, it's about $84. It's trading at 64. So if it makes its number and it does not expand its multiple, this stock is one that could have quite a run. And think about it. Even if it went to 25 as a multiple, matching its growth rate, it's probably underpriced, and why it's had a nice move. All right, next thing in the top-down investing category. I think I said semiconductors. Take a look at this real quick. Change index group. Don't own any of these, so I'll just take a quick look at that. 2% applied materials, 8% for the week. And there you go. They must have had earnings, and you know that you can go right-click, more info from the web, and let's just take a look at FinViz. It goes right to the website, and then you can spin down and see what happened. Don't know why it went up. Kind of interesting because it looked like it should be down because Intel may have been, although Intel did say $13 billion in capital expense. Now that's kind of an interesting looking chart. Deep low here, and nice move up from 10 to 13. We'll see where it goes. I don't like the earnings picture. Something's going on there. It's probably worth doing a little bit of research. What else do we got? As I mentioned, oil, gas, equipment, and services. Something's going on here, and I'll look at the top 2. Many of these made my list as I went through, and none of them really have great earnings per share growth. Here's Schlumberger, and you can see great earnings, but not much earnings per share growth. Everything is green. Big move on Friday with the Kahuna. Trades at a multiple of 18. Yield of 1.4. Now, sometimes I'll see this, and I'll go right back to my MarketSmith, and I'll ask the question, what is this PE? How does it compare with PEs in the past? And so here's your PE of 18. So I look here. Well, if it sees 593, so about $6 a share, so that's $100 at the current valuation, accelerating earnings coming in the next couple of years. You might see the multiple expand. If I look at the weekly, how does that 18 compare? 18 is in the mid-range between 8 and 33, so there could be an opportunity in Schlumberger. Let's see if Halliburton looks the same way, to see some PE expansion to drive price. Because Halliburton's another one that from 29 up here to about 36 has had a nice move. Doesn't seem to have the earnings power of Schlumberger. Trades at a multiple of 11. I think part of this has got to do in a 4 to 30 multiple range with some of the settlements that BP did in the Gulf. Clearly there's increasing drilling in the Gulf, and so that may be what's driving some of the interest in Schlumberger and Halliburton. That's a very nice looking run here from the middle of November to date, and it looks like it's got more room to go. Next thing to look at is oil and gas exploration and production. And again, with oil pushing up there, you wonder why Chesapeake is there. Chesapeake has really had some management issues, but top of the list. And, you know, I wouldn't buy this right now because it's right underneath that 200-day moving average, which has been resistance. But over the last couple of days, it has had a relatively nice move up. Cabot Oil and Gas, that's a different story. And actually, now I know one of my brokers bought this for my account. Cabot Oil and Gas, which has earnings per share growth coming into the stock, trades at a multiple that's very, very high of 111, something like that. But it's clearly an uptrend, sort of a squeeze with the 50, the 7, 17, the 8 going through the 17. Kahuna on Friday, that might be one to look at in this group. The last one we'll look at are the asset managers, which were the next one here. I'll go through oil and drilling and then we'll stop. We'll go through the top 10 groups. Asset management, I talked about these at my dinner tonight. That's not what I wanted to do. I want to go right-click, change the index group, and see if the ones that I was interested in here. There's a couple of companies that have been acquiring some of the subprime debt. In this list, the one I own is Blackstone, which was up 5.2% for the last 5 days. And there's a lot of earnings coming into these groups, and you could see a lot of negatives and then a positive and some more positives going forward. The other thing I like about this is it pays a dividend at 2.3%. So Blackstone is one, and the top one that came on the list was State Street. So the money management companies, in addition to some of those brokers that we looked at earlier, certainly in a nice bullish move, all green on State Street. That's beautiful as well. And lastly, part of that complex of bullishness, and also this oil and gas equipment, exploration, and drilling, all making the top 10. 3 oil gas companies making the top 10 is interesting. So here's Neighbors, which frankly has been a dog. And take a look at this chart, and is it time to get into this little puppy? Not on the basis of earnings, and this clearly would be bottom fishing, but look what happened here. Resistance, 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 broke above the 200, pulled back to the 200, 2 kahunas in a row on Thursday and Friday. That 200 now becomes support, and although I don't like the lack of earnings per share growth, something's going on with this group. Maybe it's hitting a point where fundamentally it's becoming attractive. And I might actually consider nibbling on this one as it breaks above the 200. Why? I buy it if it takes out the high of the day, which would be 1578. So at 1580 I might be in. The low of the day was 1508. I might even go down as low as that 200-day moving average, which is at, so I might risk $14.57, and I said I'd be going in at about $15.80. So I risked a little bit over $1 on what looks to me like a change of pace with 2 kahunas breaking above the 200. You saw how many stocks in this area are performing well, and that might be something that might actually be kind of interesting and attractive. So just out of curiosity, let's look at the force 2-day down and get an idea if there's anything here that we might want to be in. So the other diversified group, this group is, I hate this group only because I love the companies, but the volume, you see the 50-day moving average, is so big that they're at the top of my list. So if the stocks are remember the force, it's volume times the change. So if it's negative, it's going to be negative force with huge volume, and if it's positive, it's going to be positive for us with huge volume. So it makes it to the top of the list. And we'll just take a look at Bank of America. Had a, considering the fact that there were some negative comments, the earnings came out, it pulled back some. But what a run this stock has had from around 7 up to 12.5. And this might be one to look for that green candle low to come in a reversal and get right back into it. Certainly been a leader. Citigroup pulled back less to the 17-day, might be a natural place to jump in. And then somewhere it could be J.P. Morgan. Really has really had a nice move after it was probably the last of these to perform. Word for the wise, check earnings per share and see. So these are in pulling back mode. Anything else here that's worth looking at? I love biotech and refiners. Let's look at them real quick. So Amgen have been one of the leaders, and it's pulling back. I don't think anything fundamentally has changed with these stocks. They've just fallen out of favor. So Amgen, if it falls to this 200-day moving average and bounces, might be setting up a potential bounce play there. Obviously, it's rolled over. Arena doesn't look like much there, but has definitely gave back about 10% last week and found 6.5 on Friday alone. Onyx has rolled back to below the 50-day moving average. And then Regeneron, one that we've looked at multiple times, has pulled back as well. So I'd be looking for these for bounces. I don't think I'd be jumping in until I had a buy sign, whether it was a bullish engulfing, a hammer, green candle low. I don't think anything has fundamentally changed on these except perhaps the market has fallen out of favor with them. Looking back one, oil, gas, refining, again, another group that I've been heavily involved in. And just look at a couple we talked about. Let's look at Western refining. So these guys have earnings. The earnings are not always consistent, as you could see. Some really big positives and then some smaller numbers, some negatives. Good capital-intense businesses subject to plant failures, fires, and other challenges within the industry. And, I'm still bullish on this group, but I don't know where this is going to drop to. It may be nice to be able to pick it up off that blue 50-day moving average again. So that's how I do top-down investing. Now, I don't only do top-down. I do some things that are more bottoms-up investing, and I also use a couple of shortcuts within HGSI. One of the shortcuts is called the group inclusion filter. And what the group inclusion filter basically says that HGSI comes with many groups. Now, in the smart groups are a number of groups that are done for you automatically. For example, Rouse and Catcher, the 71 stocks that met their criteria for a pocket pivot on Friday. Now, just out of interesting, when I talked about builders and the action around the builders, let me just look at the ones that have pocket pivots. And let's look at, we've got a bunch of asset managers, which we looked at earlier. We've got construction and farm machinery. We've got home building, Ryland, oil and gas, exploration refiners, specialty chemicals, these thrift and mortgages, these are where pocket pivots, which is lots of strength, came into the market on Friday. We also have a number of my favorite Woodward and Brown groups, including Best Criteria. And if you right-click, go down to group properties, you can see that small cap stocks with solid credentials that are an uptrend, show strong earnings, revenue growth, and strong relative strength. So this is what's in this group, and they find the best of the best every night for you. I like ERG 240. Stocks with EPS registered at the group rank have a minimum ERG of at least 240 and the last close of at least $3. The top 25 stocks are selected. These are considered balanced, so fundamental and technical. So if these stocks represent strong lists, then wouldn't it make sense that a stock that's on many of these lists might be better than a stock that's on one? So there's a product within this called the group inclusion filter, and what it basically gives me is a report that looks like this. And it basically shows me the stocks that come to the top. So I think we should look at the top 10. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So just to be clear, I'm going to copy this. These are picking the stocks that had the most smart groups from the groups that I identified that I like to look at. And so I take those. So that means they showed up the most times. They must be the best. Who knows? I know that it's a great way for me to figure it out and find the best stocks at a given point. And I'm going to do it right here, and I'm going to call it Web Top 10. I'm going to click in there, write paste list, and that should be, I picked more than, or I don't know why that one showed up three or four times. See what else is here. Microcores, I only need it once. All right. Let's take a look at these. Well, I guess 11. I pick stocks, and then I will say good night. Go index. Open up a warehouse. All right. So let's close the night down by looking at the stocks we found by the combo rankers, and then I'm going to look at my buy list and see what themes, and then say goodnight. AIR is a aerospace aircraft and parts company. Was in a downtrend, broke above the 200, mostly green except for the Bongo Daily, not much earnings per share growth. The reason why it's making this list has got to be related to the fact that since it bottomed with a green candle low here, by the way, in 42 days, it's up 46%. That's strength. Not sure I'm interested in that one. Lithium Motors, someone's got to sell those cars that Ford and other people are making. Certainly in a nice move, turned green on Friday, has earnings per share, trades at a multiple of 14, pays a small dividend. Air Methods, I think this is an aircraft leasing company. Yep, yeah, air transportation. So it's EMS in the air. All green, pocket pivot on Thursday, sort of a shallow saucer formation, ending in a pocket pivot. Another one Thursday, everything green. Awesome earnings per share growth. This has the makings of a leader. I put that on my buy list. ARM Holdings, a semiconductor, lives and dies, I think, with Apple. Certainly in a nice move. It makes money, has earnings per share, trades at a very high multiple of 80. So I'm a little bit nervous. It's living up by the high jump bar, plays at a very high multiple. Probably not as excited by that one personally. Fleet Core, I believe these are leasing and service. Commercial fleets, oil companies, petroleum markets, fleet and lodging payment programs, fuel card services, petroleum distribution. Maybe it's just a charge card. Well, if it's a charge card, that's pretty exciting when you think about Visa and MasterCard. It's exciting when you look here. A big gap up with a couple of kahunas back here in August. It's been nonstop since. How tight can you get? Everything's green. Pocket pivot on Friday, still makes money, trades at a multiple of 23, and a growth rate above that. I'd also put this on one that I'm very interested in. I actually bought some. Here's one of our home builders. You can pick any. Lower left, upper right. Be nice to buy it off the 50 if you can get it again. Everything is green. What can you say about these earnings per share growth? If they meet these numbers, stock goes up. We looked at Stratasys already. Michael Kors is sort of a young stock. If you think back to the pattern that we saw in Air Methods, it's a shallow thing. Are we seeing that same pattern develop in Michael Kors? I'm all into pattern recognition. So kahunas, maybe a pocket pivot coming in here might be setting up a nice time to buy this IPO young stock that I think is a leader. Seagate, this is a tough one. I love this. I'm in this. It has had great earnings per share, and the stock did nothing. Now the earnings per share decelerated, although it still has great dollars and cents from the earnings per share perspective. These guys get no respect in Western Digital, pays at a 4.5% PE, and plays at a 4.5% with a 4.3% dividend yield. So actually, an income producer and one that's in a nice move. tons of pocket pivots. That gets my attention. Celgene, I gave back a little bit Wednesday and Thursday, had a nice day on Friday. A number of analysts have come out at $125. It's a little bit rich for me to get into it now. I came out on the web and said to buy it when it was back down here. They have affirmed earnings for the next 2 years, and they'll double by 2017, their sales, which is pretty phenomenal. And then I saw some other ads talking about Celgene, the next great biotech. Trades at a multiple of 23, so even with that huge run, that ROE, 32.38. It's kind of stock that even Ian would like. So it trades about its growth rate, and leaders can trade up to twice its growth rate from a multiple perspective. So this one potentially has room for a multiple expansion. My concern here is high jump land. This, pull back to about $96, that 8-day exponential would be considered healthy. I'm not sure I'd let it drop much more than that. 3D systems we already looked at, the leader in the 3D printing, and that's it. So, those 10, 11 stocks, and at least 8 of them, let's count them up. Lithia, Air Methods 2, Fleet 4, 3, Ryland 4, Stratasys 5, 6. 8 of those would be buys tomorrow. 1 would potentially be a buy. Celgene, just so simple with that simple group inclusion report. So let me just go back to my original PowerPoint and see what we handled tonight, last comments, and then say goodnight. So what I wanted to do, I wanted to do the weekend review, so we remain in an uptrend. One of these days it's got to stop, but your guess is as good as mine. We looked at a top-down investing. We identified a number of strong industries and sectors and some stocks within it. We looked at group inclusion filters and smart groups. Sprinters is one I'll look at very quickly, and I showed you edgeradar.com. So lastly, just a couple of quick things. In the warehouse view, you can open it up, go all the way up to all securities. And if you go into the view, and you go into HGSI Strategies, Woodward & Brown, Reference Library, these are all different systems that you can look at to find stocks, best stocks, and they're very self-explanatory. And I might go down and look for sprinters. So let's see if I can find them. I think David Ghilardi, I think, was part of this one. I can't remember when we put sprinters. Miscellaneous. So these have been great stocks as well. Some of these are a little bit different. We'll look at them very quickly, talk about them. Cray is probably one of them. I've been in and out of this guy. What a great run for a technology stock. I keep saying I'm going to stop this, and I keep going. What a beautiful picture this is. Not overly extended, mostly because after it ran up here, it went sideways for a long time, allowing moving averages to catch up. Sherwin-Williams, I mentioned this either as another play on the housing industries. You got to paint those houses. You can see beautiful leader there, lower left, upper right-hand corner. PPG is another, more home groups. So just sprinters is a way of just dropping down a sprinter into the view and taking the 8,000 stocks that are in the list and getting down to the top 80. I find that very useful. Lastly, let's just look at my bottoms-up analysis and what I saw in my buy watch list for tomorrow. And let's just go down to. So I found 60 attractive stocks, lots of extended stocks. The majority of these are extended and maybe not at good buy points. But let's get an idea of where I saw strength. Retail apparel, I liked. Couple biotechs were interesting. Construction, farm machinery, probably a play on China. Home building, 1, 2, 3, 4, 5. All right. What can I say I haven't said already? Oil, gas, equipment, and services. Drilling, lots of strength there, as I talked about earlier, and then a smattering of other things. So on this note, I'm going to shut it down You notice in HGSI you actually can see when the earnings are due, so you hopefully don't get into trouble. And those that have TradeStation, you ought to go look at the TradeStation forum, look up the guru because he's back, and that means you have a free indicator that can pull earnings dates into your TradeStation. What I like to do is do this, and that way I can see, FCX will be before the market tomorrow. Abbott, Envision, in the sense will be before the market on Wednesday, as is URI, so you don't get hoodwinked. And this is a free indicator that pulls data from briefing.com. Those that come to the meeting in March, I will be showing you how to get your own green candle high and green candle low indicators. And I basically build those in so during the day I can be scanning markets looking for green candle lows and green candle highs. And I like these because it turns out that when I go back and I look at reversals often occur when a stock appeared open below the close of the prior day and closed above the prior day. So you have a bullish engulfing pattern as well as a green candle low, which could be a very bullish reversal pattern, or at least it makes me look at AT&T here. And I run a major list throughout the day, and everything I can do with this is I can scan within TradeStation every night looking for green candle lows, looking for red candle highs, and trying to get myself a little edge in my trading. On that note, I want to wish everybody a happy Martin Luther King Day. Congratulations to the President on his inauguration, and to all my friends out there, thanks for coming. Have a good night. Tell your friends about this, and we'll see you soon.